You've heard it a million times. Gold is safe. Gold never loses value. But let's be real. Most people who say that don't even know why. Is gold really that powerful? Or is it just a shiny metal your grandpa buried in the backyard? In this series, we're diving deep into Gold Trading Bootcamp by Gregory Weldon. And trust me, it's not just about charts and candles. It's about war, money, politics, and why gold might be your best weapon when the system starts cracking. Greg Weldon? He's not some TikTok trader flashing Rolexes. This guy worked inside the beast as a Fed watcher, a money manager, and someone who actually understands the global macro battlefield. And what he says about gold? It's not hype. It's not clickbait. It's data, analysis, and a wake-up call to every trader and investor. Weldon's take is simple. The system is built on debt. Governments spend what they don't have. Central banks print like it's a video game. And inflation? That's not a glitch. It's baked into the system. When the dollar weakens, when rates get slashed, when the Fed freaks out, gold doesn't panic. Gold flexes. Weldon says gold isn't just a safe haven. It's a thermometer for financial fear. The higher it goes, the more pressure is building under the surface. It's not just about price. It's about what gold is saying, about the economy, about debt, about the real cost of money. And here's the kicker. Most traders, they're asleep. Too busy chasing signals or staring at RSI levels to see the big picture. Weldon's method teaches you how to think like a macro strategist. It's about zooming out, looking at the dollar, interest rates, consumer debt, and connecting the dots. So you're not just reacting, you're predicting. So in part 1, we're setting the stage. We'll break down why gold reacts the way it does during financial chaos, how inflation is silently stealing your wealth, and why the Federal Reserve is the most powerful and dangerous institution in finance. This isn't about scaring you, it's about arming you with knowledge, with strategy, with a trader's edge. Let's get into it.